Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Today, we are going to uncover the secret of financial success and unlocking the power of life insurance in your financial plan. My name is Seth Cressman, joined here once again with Dan Mickelin and Ben Brayshaw. How are you gentlemen doing today?
I'm doing really good, Seth. Really, really good.
I'm doing good, Seth. Dan, glad to hear you're back.
Yes.
That's not what we said at the last show, but we're glad to have you back.
That's all right. You know, I'm here either way and ready to go, but it was nice to get a little break, too.
I like ragging on everybody when you're gone. It's so much. It's easier to get forgiveness than permission, so.
That's funny.
It is funny. I like having fun with you guys.
It is.
You're good guys.
It's funny because actually you guys did the last show without me, but I'm glad to be back too, Ben.
Oh,
and
Seth was here. Oh, that's right. I forgot. I probably ragged on both of you guys while you were here.
Yeah, check the tape on that one, Seth.
All right, goodness gracious.
Well, where do we go from here? I think only up is my answer to that for you guys. Yes, we are about to have some fun and embark in the financial planning journey and Money on Tap. If you guys are unfamiliar with what we're doing here, and welcome. We're glad you're here. We're all financial planners with Brayshaw Financial Group. Yes, we are going to be speaking and talking about financial planning and insurance and how to really unpack insurance inside your financial plan. Some of it's going to start off a little elementary, but believe me, if you are even just an expert in the financial planning or insurance industry, there's going to be some nuggets tucked in here for you today. And it's a powerful tool that we use throughout financial planning and estate planning. And it's really critical to have some understanding here. Are we going to, we could spend a lot of time on the subject here with you guys, but really we're going to kind of get through a bunch of these topics here. Our hope is that you gather some information here that you can take back and, unpack with your family and understand a little bit better. Join us on another podcast and dig a little deeper, and give us a call here at Brayshaw Financial Group so we can help you out, do some financial planning with you, and really, really make a difference in what your plan looks like.
Yeah, I'm excited about this show today. I think one of the most utilized tools, correctly utilized tools, is insurance. I mean, I started out as a stockbroker, and kind of got into that mix of hey, you should be selling insurance, and I'm like, well, insurance is not what I'm in. And as my career grew, and as I started really becoming the financial planner of where I am today, I've really was overwhelmed by the clarity that insurance can drive. And it's not just about death, it's as much about life. And then the evolution of insurance over the last 2 decades has been phenomenal. And I'm just excited about, really educating people on, a healthy engagement of insurance. Because, I always think about, what is it, that Groundhog Day movie with Bill Murray and, was it Ned, whatever his name is, Ned Ryerson, everyone has this kind of like hilarious memory of, or bad memory of insurance. And the truth is that a healthy relationship with insurance can really be extremely profitable, and people don't think of insurance as profitable. And I think that's one thing I'm hoping comes across today.
Yeah, there's no doubt it's something that we talk about often, and it's one of the kind of least understood aspects of what we do. We've put together some pretty creative and at times kind of complex plans for people depending upon their needs. But when we do reviews, one of the things that comes up most often and seems to be the kind of least held on to is the insurance component. We've got to kind of re-review that, which is okay. I mean, that's what we're here to do. Happy to explain our way through that. But it is something that, people just tend to look at it as a cost, and it kind of falls off the ledger for them in terms of where their investments are at.
Well, I was doing a review with someone today, actually, and she was, it was for her mom, and she was just remarking at how the various pieces of insurance we had done, which was a multiple of insurances, from everything from life to long-term care to investment-based insurance, and she was just like, "You guys fixed it all." I mean, that's literally what she was just like. I don't have to worry about any of the payments and everything. I never saw this all coming through like this, and I'm glad I have you guys. And that was with Sheldon, one of our partners down in Virginia. And that was just really exciting when somebody really gets the clarity of a plan and how insurance can be powerful for them. And that's just not, that's the coverage, the care, the piece of solution. That's not the rest of her investments, and I think that's what's missed quite a bit.
Well, without further ado, it is time for Money in the News.
First up today from Elizabeth Buchwald over at CNN. Fed stress test shows banks' strength in light of the recent crisis. And I thought this was interesting and important to share because, this banking crisis that we went through kind of lingers in the news still. And I know from people I've spoken to about kind of the simplest forms of investments that they have, not necessarily with us, but things like CDs and savings accounts at banks, as we engage them about where rates are at and kind of factor that into their overall wealth, that question keeps up. Hey, do you think that this bank I'm with is safe? What's the difference between big banks and credit unions and all that? So it's another one of these kind of frequent conversations for us. But it was good to read this and be kind of reassured by the simple fact that recently the Fed took the 23 largest banks in the country and put them through their version of a stress test, and all 23 passed, which I thought was very important, and it's great news to share. Now, the bigger banks go through this exercise every year. Smaller banks go through it every couple of years. But, the kind of the elements of the test that they do is they will run everybody's financials through a scenario where, and in this case for 2023, there was a steep recession hit us, unemployment rose, the value of property sank, and deposits became an issue for them. But the one element that wasn't included, because it just doesn't fit that scenario for them, was the rising interest rate story.
Which I think is hilarious because a quote from the thing, the Fed's stress test carried an extra weight this year after the collapse of 3 U.S. banks sent shockwaves through the banking system. I mean, if you're the Fed and you're sitting there saying we're going through the highest, fastest interest rate hike period in history, maybe we should stress test them at a higher level before we collapse the banks. Hey, let's take into some consideration what the potential highest interest rate was in history hike before that, put that in play, and then stress test the banks and see what happens. I mean, so little too late. I mean, I'm glad they stress test these things every year and every other year, depending on the size of the bank, but they never put any of these, these really high tolling, statistics into play on this. And now they're saying, well, we probably should. I mean, I don't know about every listener here, but I'll tell you, I read this stuff, and I think the Fed is made up of the dumbest people in the country. I mean, these people are supposed to be the experts in this space. Congratulate. If this was my job, I would be like, yeah, we should stress test just like we stress test people's portfolios for crisis. And they're the ones that are defining it's going to be a bank crisis. So you think they would stress test it? I mean, it doesn't take a genius to think that we should stress test these things to the limits of what we're prepared to do. I mean, or have done at least.
Yeah, here, I thought this was a feel-good article. There we go.
I'm sorry, but I mean, I listened to the Fed. I'm just saying to myself, hey, congratulations. I'm glad you guys really did this now. Thank you. Sorry.
Well, Seth, break the tie. What do you got?
Gosh, well, I do think it's amazing that they just haven't found a way to incorporate recent history. I've really got nothing else to say except for, I'm not surprised. Part of me is surprised, and the other part of me goes, well, yeah. Why would they do that? Because they wouldn't want to see what those numbers look like and what they have to do. And hopefully it's doing what it's supposed to do, which is, calm people's nerves and, make everybody feel good about what's going on out there. And that's unfortunate that that's what their goal is, but Seems to be what they're trying to do.
I thought it was. I mean, I did think it would. I mean, the actual testing is very interesting, Dan. I mean, it is interesting. I'm glad they did it, and I'm glad we have some data here now to actually point to which bank you might want to put your money in. But I thought it was funny that Capital One suffered the biggest loan rate loss against the stress test. I don't think of Capital One as a potential vulnerable, and vulnerable wasn't the thing, but to be the one that suffered the most under that stress test was a surprise to me, honestly. And Wells Fargo didn't fare well either under a market shock, but their stock rose in after hours.
Yeah, I mean, they all passed, I think, is the bigger point. But yeah, certainly to varying degrees. And if that's something you're interested in, check out CNN. You can get a little bit further detail. They don't really break it down bank by bank, but they do name a couple and how they specifically fared.
Yeah.
Barron's advisor, Jack Denton, brings us the NVIDIA slumps on China chip rules. So do we, buy the dip is what the article is talking about here. And that is not a solicitation for an order, folks, in case you were wondering. But there is some interesting news here on the chip manufacturers and AI and what's coming down the pipe. The limitations, or at least the imposed limitation on what chip manufacturers like NVIDIA are allowed to sell to China is kind of the key story here. And, the reasoning around that is several and many, particularly I think the defense is a big deal in that they do not want to go ahead and just start putting the best of our chips over into China's hands to do, build their defense. The other limitations there is possibly, the container idea. And that's what China's coming back and saying that you're trying to limit us, you're trying to contain us. The actions are yes, but the words are no. What are your thoughts?
Yeah, I think, honestly, I'm in agreement with it. And part of it isn't rooted in what's here in the article. It's other stuff I've read lately, just having to do with sanctions and the things that we've done. I mean, it all points back to they keep finding all these drones and weapons all over Ukraine that Russia's using, and they're buying from Iran. And lo and behold, if you rip them apart and they're filled with American stuff, right? So our sanctions regime just isn't working. Some of this material we're trying to limit is still finding its way into the hands that, we intend to keep it away from. So I wonder how much any of this works because, some third-party company could just purchase these same chips and route them over to China. But the simple idea that we're having some awareness around this and trying to limit our potential future foes, I think makes a lot of sense. But from the investment perspective, the other side of that coin is, these companies, when those sales get canceled or it gets harder to export, they might see a little bit of dip in their balance sheet and in terms of revenues raised through export. But I think, back to the point of the article, these companies are strong. The demand for chips is going absolutely nowhere. I mean, they will continue to sell every one that they make, whether it's state of the art or next level down. These things are going to continue to go. So investment-wise, it still looks like a pretty bright future for these guys.
Well, it says the Biden administration is considering more restrictions on selling AI chips to customers in China. But is that really just trying to create a market for Hunter?
He's probably selling the rights right now. I know. Hey, listen, I could go everywhere with this article, but I would say this. I mean, we would be naive to think that, by the time a movie hits the U.S. box office, right, it's already been, dubbed or whatever into China's hands no matter what. I mean, the reverse engineering of these chips and whatever they got to do to get the technology that we have in their hands is we're not talking a long, this isn't going to hold them back years and years on development because we didn't sell them to them. I mean, this might be as much, showing face than anything else from a political standpoint. I just don't see us being able to hold back this tech, selling it. I mean, if these chips are that valuable, China's going to reverse engineer them, and they're not going to have a problem doing it. So from that standpoint, and Taiwan, all these different things. I mean, if we're not willing to play ball, they're going to create problems to solve whatever they need. They have zero restrictions and limitations and concerns. I appreciate that we have this awareness, and Dan, I'm in total agreement with you. I don't normally say that, but I'm totally in agreement with Dan. We shouldn't do this. I think it's good that we're holding back on distribution potentially, and that's in the cards. That will probably negatively affect the stocks. I do think that the potential, limitation on sales would have some, quantitative calculation. But you're right. There's no limitation. I mean, we couldn't build enough chips fast enough. I bought a little side by side, and I waited 2 years for it. 2 years. I mean, it's like, they were like, yeah, well, the chip delay. I mean, how many chips are in a stupid little side by side? You know what I mean? So, but it's just to think about the manufacturing delays that still exist in the United States. That's crazy. I mean, so I think you're right. We're going to sell every chip there is, and whether we sell it to China or not, but it's definitely an issue.
Next up, we got pickleball's price. Sport may cost U.S. up to $500 million in injuries this year. This is coming to us from the New York Post. Sharon Thaler, thank you for that. And this, I thought, was kind of an interesting article, although it was a bit of amusement, but it did have an effect in the financial world on United Healthcare in particular. But pickleball, if you're unaware, is the sport that's kind of come up. It really hit the mainstream in 2020. It's kind of a cross between tennis and ping pong, right? It's kind of
and badminton.
And badminton, right? So it's a racket game on a small court. You got to hit the ball over the net, and it's really taken off. And the first time I paid attention to it, honestly, I heard a bunch of celebrities, Tom Brady included, were buying these teams, like professional pickleball teams. They're investing in this. I was like, what the heck is this pickleball? Anyway, fast forward now, it's a big game in the senior community. A lot of people playing. It's a good way to get some exercise and stay healthy, but try to stay healthy. But apparently, it's causing a real rash of injuries here and illnesses. So,
to be clear, if you're over 50, there's a 90.9% chance you're going to be one of the people injured. Because that's not actually accurate.
That's not how the stats.
That's not actually how it reads. But it's 90.9% of all injuries were people 50 years and older. Sorry,
yeah.
But if you're over 50, stop playing pickleball.
Well, we only got a couple of years left. I haven't even learned to play. Come on.
No, I think it's hilarious because I have so many clients that play pickleball. They love it. And I mean, I hear about I'm just making up a name, George. He was diving across the court. I'm like, he's 75 years old. You shouldn't be diving anywhere. He's like, he's too competitive to play this game. We hear all this stuff. I've had clients, sprain ankles and this, that, and the other thing. I mean, it's definitely a winner for the doctors for sure, billing capacity wise. But what I thought was interesting in this article, and we did talk about United Healthcare, but if you're, there are so many other healthcare injuries that are not physical. They were talking about cardiovascular. A lot of people have had cardiovascular problems, and they're not sure whether to attribute it to the increased activity, from being more maybe stagnant living, like walking and, maybe speed walking or whatever you do and, to stay healthy at an older age. But this has really amplified people's heart activity, and that's been a noted item.
Yeah, I mean, it's amazing. They've 67,000 pickleball-related emergency room visits, 366,000 outpatient visits, 8,800 outpatient surgeries, 4,700 hospitalizations, and 20,000 post-acute episodes, whatever the heck that is, but those sound good. So this is really, there's some staggering numbers around this for sure.
Yeah, I definitely don't want to discourage anyone from getting out there and getting exercise. It's, essential. But, just look out for that racket. It's probably going to hurt if it hits you. and maybe you don't have to, dive for that pickleball. And I'm just actually remember the last time we played racquetball. I'm pretty sure it was in college and I wasn't wearing eyewear and I got some really close call with the ball there.
Yeah,
but,
that sounds about right. I'd like to know how many racket injuries there are. That's what I would like. Where's the statistic on racket injuries? Like, racket, literally boomerang from the other side of the court.
Yeah. Well, if you're my kids, you don't even need a court. You just have to have a racket and be in proximity because you're probably going to get nailed.
Probably excluding all the knife fights in the parking lot afterwards, though. That probably didn't make the list, right?
Well, that's going to do it for Money in the News. You are listening to Money on Tap. And when we come back, we are going to dig in to unlocking the power of life insurance in your financial plan today. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Also, really appreciate the recommendations from you. The the feedback is phenomenal. We love getting the shout outs and the ideas for shows and stuff that you want to hear and need to hear in your financial planning. You can subscribe to us on Money on Tap in the podcast world. If you do, just send us a little message and we've got something for you. We'd like to send you a gift for subscribing to Money on Tap today. Thanks for joining us, and we'll be right back.
Hey everyone, Dan Mickelon here with Brayshaw Financial. Looking for a hassle-free way to invest? Look no further than Brayshaw Financial Group. With Brayshaw Financial Group, you can start investing with as little as $100. Enjoy a user-friendly platform with a diverse range of investment options. Visit Brayshaw Financial Group and start your investment journey today. Brayshaw Financial Group, investing made easy.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Looking forward to unlocking the power of life insurance in your financial plan. That's our show for you today. It's the tool. Ben, I'm going back to kind of your story of getting going in the industry, being a stockbroker. And I came very much from that same perspective, which was the wirehouse, where it was, stocks and bonds, and life insurance was one of these things that nobody really wanted to touch. They usually send them over to somebody that's in the property and casualty world, the State Farm agent, the Allstate agent. They have a life insurance that they, partner with them to do business. But in that world, nobody really wants to touch this. And that was my
it has that stigma, Seth. It was beneath you. Like it did.
Oh yeah.
It was totally below your standard of care for somebody. Like it was such a joke. I look back at that, how stupid that is. But go ahead, yeah.
Yeah, no, I think you actually, that was a very humble. That was it. It was beneath. And that's the way most of the wirehouses deal with it. This is not what we care to do, because we're working in, this realm of the financial planning and this kind of, client. And it was really frustrating while I was there. And they wonderful people that I worked with. But to see a company that was telling their clients what's important for them is what they do, and the rest of it was kind of beneath them, or not a part that they were going to be willing to consider in their plan, and then to come to realize how critical it is, how absolutely foundational life insurance is for anybody that is doing financial planning. And so I'm a little excited about that today. It's changed my perspective. I'm one of those people that has a life insurance story, inside of my own experience. I share experiences with clients where life insurance is pivotal in how they're able to move through life, take care of all these different parts and pieces that used to just warehouse in one idea alone. And that was, if you die, this money gets left to whoever you want, right? If you designate it. And today we're going to not only cover that topic, like, well, what's the right amount of that idea, but also what are these other parts that life insurance really covers? And some of the understanding around, like, why does life insurance do what it does, and how does it work behind the scenes?
One thing, we have a client who lost her husband within the last year or so.
Yeah.
And, young family and so forth. And life insurance played a major role in providing for that family. A young person dies every day. And, these insurance companies, people are paying $20-$30 a month or something for their $1 million insurance policy, and these insurance companies pay out these policies almost every day. I mean, they literally write massive checks. And that's how insurance works. I mean, lots of people pay in, lots of people don't die, some do, and that provides wealth for a family to survive and care for itself. that's how everyone understands insurance. I mean, that's basically how everyone sees insurance. This is what insurance is for me, and that portion of insurance has played a salvation kind of role in so many lives throughout this world, and it's important. And some people completely disregard it. They say, I don't need. I'm okay. I'm self-insuring. My wife or husband will make it on their own, and they don't need us, and so forth. And to each their own. But insurance in the general form has been a lifesaver for so many, many people. And we're going to talk a little bit about that today, but that's not the point of the show.
Yeah, for a lot of people, envisioning their future and their eventual demise, they'll have this vision of, well, we'll make it to 80, 85, whatever the number is, and by then the kids will be fine, and I'll have a house to leave them, and there'll be accounts, there'll be retirement money, whatever's left over, But for people who fall into that scenario, well, life insurance probably didn't prove to be all that important. However, the insurance is for the situations that are not that one, right? For the people who happen to pass prematurely in the state that they leave their family in behind them, it's really important, and it's its base purpose. That's what life insurance is there to do, right? It's a cost. But things have changed in the insurance world. If you think about all the different products that are out there, not just in the financial world, how everything's evolved, cars, phones, television, you name it, those type of innovations have continued in the insurance world as well. They've changed dramatically over the years. So there's just a lot more benefit, a lot more use, a lot more purpose that you can derive out of these things. So while it is a cost, it can be a situation where it's a cost that returns to you similar to what an investment would.
And it's a cost that can become a major asset for you. And I think, and it's not about death. It's as much about life now than it's ever been. There's a number of different types of insurance policies. I talked a little bit about term life originally, kind of the paying the $20, $30 a month and having a $1 million or $2 million life insurance policy. But then there's, that's term. That means that you're insured for a period of time, a term that you are covered for. And usually you might buy a 10 or 20-year term, and then the insurance company after 20 years will either say we're not offering it to you anymore, or we'll offer you insurance for 1 year at something 500 times that price as a potential scenario. But what I have found is that a lot of these 20-year terms don't renew at the number that's on the illustration. That's just usually what they project the number to be. It's usually a small increment higher. So if you are nearing a term insurance policy and you feel yourself not insurable anymore, don't be completely scared. The renewal might not be as bad as you think. That being said, then you go from this term insurance, you go to permanent insurance, and that's where you really start branching off into all sorts of confusion for a lot of listeners, right? Guys, how many times does someone say, well, I got something, but I don't really know what it is? That usually tells me they have some form of permanent insurance. You can have permanent mixed with term insurance, which gets complicated. But then you get permanent insurance where you're what we call whole life, which is something that people invest in a kind of a fixed rate of return. It's based on dividends from the insurance company, and they pay you a dividend, and they tell you, hey, this is what your minimum return is going to be, and then our dividend's usually higher, and this is what it's averaged. And then you can get into variable forms of insurance, which include variable life, which are based on mutual fund sub-accounts, which ride the market up and ride the market down, so you can see your investments swaying in big motions. And then the third scenario, one form I actually personally own, is the Index Universal Life policy, which just allows you to participate in the performance of the market, but no guarantees of what you'll make. And they actually have prevention against loss in the market, which is a great scenario. And I personally like that. And I prefer my insurance to have kind of some quantifiable outcomes, instead of having a lot of vulnerability to something that I'm looking to insure.
Yeah, I think, it's often some combination of those things that is the best solution for people, because you can factor in, the cost versus the benefit and the length of time they'll need a certain amount of coverage for.
Right. And that's like the other day I was talking to you. I was like, I need to get some more term insurance. It's kind of funny when you start thinking about different points in your life where you need to adjust and rotate. And, I have insurance that's, coming to an end. I want to get a new one and carry it on to the next phase.
So there's not a one size fits all here most of the time, right? There's a lot of the time there's a plan that can come together around certain kinds of insurance for certain periods of time for certain specific. And if you were to actually take a look even further than what Ben, you were talking about the primary on the life insurance pieces there that we focus on, but then there's the disability insurance, and then there's accident insurance, and there's all the cancer insurances. There's all sorts of kind of insurances that basically for those insurance to get sold, somebody has to have a life and health insurance license to be able to offer those for sale. And so they do fall under that life insurance umbrella. And for the most part, we do consider them within the conversation. And what we're finding is that we're able to accomplish a lot within the conversation, that initial conversation of the life insurance, the term insurance, so that umbrella of whole life insurance or permanent insurance that has all sorts of different ways of accomplishing goals. And so what I love is that there can be that pure insurance concept that we start with, which I say pure insurance, and by that I mean, you have your life expectancy, and you have a term insurance, which is there's no cash value in this. It's just, for 10 years, 20 years, 30 years. It's a term insurance for, say, $1 million. And that's the price you pay. And if you die, $1 million goes to your beneficiaries. And
don't you, Seth?
After that,
you're talking about this. The thing that I, a lot of listeners hear, like they go and they buy insurance and they sit down with somebody, and the first thing they want to do is sell them permanent insurance, right? I mean, how many people have we met that own permanent insurance and are totally underinsured that should have like a large term policy? Like that's the kind of stuff that just gets under my skin, because I'm thinking to myself, why do you have this? Like you're not even there yet.
Right. And that's the plan part, right? That's exactly where we want to take a look at how we can really maximize. And that's, I think, as far as planners, it's one of the things that we really try to do is be efficient as possible with what we have. And usually if you're in a certain demographic, maybe that's your age, maybe that's your income, maybe that's, how many children you have or liabilities you have. All those things come into a factor of trying to address a need and a solution. And the first thing that we likely are going to take a look at is how much of this can we accomplish with the least amount of money possible. And that's why term insurance is what usually, and Ben, as you were saying, we would like to see more people have that conversation before they ever start to dip into the whole life and the rest of those conversations. You guys, you're listening to Money on Tap, and we are going to take a quick break. And when we come back, we're going to talk about determining your life insurance coverage amount. What is the correct amount, and how do we start to take a look at what are the factors in that? You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We'll be right back. Hey, this is Seth Cressman with Brayshaw Financial Group. Are you looking for a hassle-free way to invest? Look no further than Brayshaw Financial Group. With Brayshaw Financial Group, you can start investing with as little as $100 and enjoy a user-friendly platform with diverse ranges of investment options. Visit Brayshaw Financial Group and start your investment journey today. Brayshaw Financial Group, investing made easy.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about life insurance, and the perspective that we like to share around life insurance is coming from the planning perspective. We talk about three-dimensional investing, really taking a look at all sides of the issues, understanding the landscape of the products that are available out there in this realm, why they're important or if they're not important, and bringing to the table for you the best solutions possible. And it's not just for today. This is a plan. We're talking about today. We're talking about 5 years from now. We're putting those pieces together to start to prepare. So with that, the question comes up, well, what is the right amount or the right kind of life insurance?
Yeah, I would say that this is the conversation as planners we get all the time, and really from a planner's perspective, it's all about the recreation of wealth, right? So or potential, what is the viable income that you're losing through the death of a spouse or that loved one. I hear a lot of people say it's 10 times salary. I've heard that 1,000 times over. I actually usually tell people it's either 10 times your gross income, your gross salary, or it's basically 20 times your net. So they're different numbers, but if you're trying to figure out, like if you want to, there's two ways of looking at this is like I'm going to inherit, I'm going to receive a death benefit for a certain amount of money, and I'm going to take 6, 7, 8% out of that a year, and I'm going to spend that down till retirement, and I'm going to live the same way I had and save for retirement and do all those things that I expected to do. And I'll offset some of that with Social Security income for maybe the kids and different pieces like that. So it's not completely a full replacement. People will do 10 times your gross income. So that's before your taxes and withholding for retirement. Or you can just do 20 times your net. So whatever you're taking home, do 20 times that, because theoretically you can potentially preserve your asset and take about a 5% income out, is how people look at that kind of Monte Carlo perspective of distributions.
Yeah, and it's other things that factor into that are your liabilities, right? Your open liabilities. What's left to pay for the house, credit card debt, potentially funding for college education that hadn't yet been fulfilled. So you really do want to understand where you're at in life and, not only, where you stand today, but what are the things that you hope to accomplish in the next 5, 10, 20 years and, potentially fully fund that for your spouse under the presumption that you'll be gone and unable to contribute your income to that story. So there is that potential there using this tool, should you unfortunately realize that early demise, that the plans that you laid with your loved ones can continue to go forward.
Yeah, and I think the other piece about it is, for a lot of men, they say, well, I don't really need insurance on my wife. She might stay at home with our kids, or she works a part-time job, or something abbreviated because we have this life to care for our children. And she hasn't pursued a career at the level that she wants or whatever. If anything, you still need to insure them for as much as you possibly can for yourself equally. Like we usually tell people, well, if you're buying $1 million on yourself, you probably need $1 million on your wife. And that being said is that you're going to have to hire people, or, your workload may be reflected by that, or you may be taking another job making less money to be there for your family. Like there's a complete shift of responsibilities that will directly impact your income in a very comparable way. If not, you'll be losing as much from your current income and losing your wife's income plus the help and hiring people. Like you need as much and vice versa as that stands. Because I meet a lot of people, well, my wife doesn't work outside the house, so we don't need any insurance. I mean, that's just not true. And if you're living in that standard, I would encourage you to reconsider that and base it on what would it cost you to replace the workload of your spouse and the reduction of income that you would make to offset whatever time restraints that being there for your family takes away from your other job.
This is a good spot for us to not only just address the life insurance piece, that's what we're trying to cover first and foremost, that life insurance question. After that, what Ben was talking about and Dan were talking about, that life insurance can do so much more today than it ever used to. And over the last 20 years, there really has been a revolution inside of life insurance and how it works and how people qualify. For instance, right now, $2 million of life insurance without really having to go through the medical application piece. And, if you've kind of got that clean bill of health and all that good stuff, life insurance will do that. They have their metrics down of assessing the risk so that they'll issue those policies right now. And generally in a term is what they're looking at there. But outside of this, we're talking about living death. Living benefits is what we look at for that. Is if there's a living death, if you have a stroke, heart attack, cancer, there's all these other ailments that can happen that we call a living death, because basically you're still alive, but you start wiping out all of your assets in order to try to maintain your lifestyle and take care of your family, take care of your needs. And simultaneous, now you have a real issue that you're having to try to get coverage for that medical insurance doesn't always cover. It gets that first base, but it will not usually get to the finish line on the rest of those pieces. So as we start to take a look at what kind of life insurance there is available that can cover some of these pieces, well, the offerings start to narrow down. The companies that are doing this start to, narrow down to a few of them. And now we start to talk about some different strategies. Like, what are we covering for these first 10, 20 years? All right. And are we cover at the end of that 20, 30 years? Are we able to cover those with our assets that we've built up at that point? Or are we starting to layer in something behind that is that permanent insurance idea that will be there for these benefits if or when those are needed?
Yeah, I think this is one of the pieces that a lot of people don't know, and this is what Dan was referring to about the evolution in life insurance, and this is just the beginning. And, anything you've ever known about life insurance, I would toss out the window from our listeners, because life insurance has just become what I would call the Swiss Army knife of in the insurance world, investment world. I mean, you can almost go anywhere with it now. But the idea of having something that will take your life insurance policy, if you have $1 million policy, and turn $800,000 or $900,000 or $700,000 of that of liquid cash you can use today while you're alive to care for yourself in a cancer, heart attack, stroke event. It's phenomenal. I had a client who had a massive heart attack. The insurance company, he only paid for 2 years. Insurance company came back and offered him 73% of the death benefit as a lump sum check. You have $1 million policy, that's $730,000. You're 50 years old. That's more money than you're going to put away in a 401k and probably make over the next, 10 or 15 years. Just from a retirement standpoint, and it's tax free. I mean, you think about it, it's like, so at 50 years old, how do I create $700,000 of tax free money after I would have to put almost $1 million plus away in a retirement plan in the next 15 years, and I'm limited to that, and my growth is potentially limited. So these are real opportunities to protect your family so you could actually have an early retirement should you have a major health crisis. That's husband and wife. That's on term insurance. That's on permanent insurance. These are things that can completely change the story of it. And I had one client who he was having trouble, talking and speaking, and now he's gone through. They use that money for therapy that healthcare wasn't covering, and all sorts of stuff. And he's living a good life now. And this is, that's like 10 years ago, I think that happened. So, it's been a long period of time. So there's some really exciting things there that can drive that.
Yeah, the whole underwriting process you spoke about, Seth, about how we can, secure pretty large amounts of insurance without having to do some of the exam process that people probably fear or familiar with. But there's lots of avenues in terms of how do we go about securing the insurance. So there is that expedited application process that we can do entirely online and via email, and that would exclude some of the physical examination issues. But if you do find yourself in a scenario where the carrier that best suits you does require that, the whole process of being examined has gotten significantly more convenient as well. You can just walk into a Quest Diagnostics and then have it be done there, and those places are all over. And as well, the examiner will come right to your home or to your place of work, whatever's more comfortable for you, and do what they need to do to secure that end of it. So, don't fear the process. It's going to take time, and you do potentially have to work your way through it, but in the end, it's going to be well worth it once you've secured that rating and then been able to acquire the insurance that you need and put your mind at ease about a whole host of issues, particularly with the living benefits in place.
Yeah, and I think when you start talking about these living benefits, and we talked about heart attack, we talked about stroke, we talked about cancer, both it's terminal and non-terminal cancer. There's critical illnesses and critical injuries like burns, and there's just a 1,001 different scenarios that ALS, the coverages on this stuff while you're living is pretty phenomenal. But that has translated into some of the most advanced long-term care planning I've seen in forever. Long-term care has completely changed. And if you've written off the idea of buying long-term care insurance, you might want to check again, because now you buy long-term care insurance on various forms of life insurance chassis. We work with a couple of companies. One we've actually had on the show, One America, where the life insurance is meant to be extremely low in the amount of insurance coverage, but the actual benefits are both not only strong, but they actually can potentially carry out for a lifetime for a husband and a wife. And they take IRA money. So for people who, all they've been doing is saving through their retirement plan all these years, you can do that. But by lowering the death benefit, you're reducing the cost potentially. But the real core item here is that traditional long-term care where you pay it in and if you don't use it, it's gone. At least you have a death benefit to return some or all of what you paid in, but the payments never change. I got a call from a client the other day that bought long-term care from somebody, and we got a notice for a 40% increase in the long-term care premiums. And it's like, these types of programs, because they're under a life insurance chassis, they're contractual. The premiums don't change, and they stop when they say they stop, and your coverage is what it is. It's pretty reassuring after watching people go through. I mean, I don't know if any of our listeners have Genworth or GE long-term care, but they have horrifically raised their prices and offered to reduce their benefits to all the people because they have so underperformed in their portfolio, and life insurance would solve that.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. When we come back, we're going to talk about maximizing the benefits of beneficiary designation and estate planning in life insurance.
Are you ready to take control of your financial future? Look no further than Brayshaw Financial Group. Our team of experienced advisors is dedicated to helping beginners like you build wealth through smart investing strategies. Visit BrayshawFinancial.com today to start your journey toward financial independence. Brayshaw Financial Group, your partner in wealth creation.
We appreciate you listening to Money on Tap with Ben, Seth, and Dan. You can contact us at 855-226-8551 or email us at info@yourmoneyontap.com. And now, more of this week's program.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We're talking about unlocking the power of life insurance in your financial plan. And we've gone through types of insurance and life insurance policies, determining your life insurance coverage amount, maximizing the benefits of beneficiary designation and estate planning is where we're going to spend a little bit of time here. And one of the key ways that we like to see life insurance used is that tax-free death benefit getting used or possibly getting used to cover the taxes from an IRA that you could be passing over to those beneficiaries. Now, yes, there are taxes in IRAs when you pass those over to the beneficiaries. And those are considerations that, thinking through the whole plan, people a lot of the time just miss.
Yeah, I think the thing that a lot of people really don't understand is the power of life insurance being a tax-free benefit, however it's pretty much used, right? I mean, unless you left it to your estate and your estate was over the estate tax exclusion, you could, create a taxable event with life insurance. But in reality, life insurance is a tax-free benefit where, you can name your beneficiaries and totally avoids, probate, goes directly to them. It's, it's something they don't have to worry about. But when you start thinking about receiving a tax-free benefit that's $500,000, if the tax rates that someone's in is 30 or 40%, receiving that is like receiving almost twice as much of a pre-tax asset. So you leave $500,000, it might be worth, equivalent to getting $800,000 or $900,000 of pre-tax dollars. I mean, if you live in California, it is twice as much, So a lot of people don't realize that you're really buying something that's really worth a whole heck of a lot more than what it says on paper because of how our tax system goes. And our government has approved this as something you can use. And, we have done so many different very, very clever things through life insurance. But I think we're going to talk about a couple here, trust-wise, that we do on a regular basis. The first thing is we use life insurance pretty regularly for special needs trusts. People who have a child who's born who has, some sort of disability that might be eligible, totally able to work, totally, competent and capable to care for themselves on some level, still might be eligible for, some level of, federal or state assistance. Well, what we would do is we write a life insurance policy, we make the beneficiary the special needs trust of that child or person, and ultimately, upon your passing, that money has all the rules to push out the money so that they would not lose any state aid or government aid that they were receiving. A super important kind of trust, very simple to write, very inexpensive to fund. I mean, you just do it with term insurance if they're really young to figure out where you're at. But that's probably one of the most, useful resources for people who are young and have a child that is disabled on some level.
I mean, it really boils down to things like, between the ability to name a beneficiary and sidestep the whole probate process and to structure trusts like a special need trust and an ILIT, which I know you're going to touch on in a minute, Ben. But it gives you the ability to kind of control your wishes and the disbursement of your assets from beyond. So because of these tools that are not entirely limited, but not all assets come with this ability to speak from beyond, that that your intentions will be followed through on.
Yeah.
Which is important for people, particularly if there's a contentious family situation. When you pass, if those assets aren't properly structured, you don't have named beneficiaries correctly, it just ends up being a mess in court that nobody gets anything for years. So this is a way to make sure that what you intended to have happen does in fact happen.
Yeah. The ILIT, I know we don't have much time left, but we do irrevocable life insurance trusts all the time for people. And they're actually probably one of the coolest opportunities for someone to leave wealth and protect it from the government from, breaking the door down to get the money of the asset. We do these trusts for people who, don't even buy long-term care. They're like, I want to leave something for my children. I only have this much money left. I'm totally fine taking care of myself, with Social Security and my pension and whatever. And I want to buy a life insurance policy and leave it to my children, which would be more wealth than I would ever be able to leave anybody because I'm going to become a ward of the state if I ever got ill anyways. I don't have enough money to buy long-term care insurance. And we put these life insurance policies in place, and it's like the gates and bars around them. I mean, the government can't break in, and we build them in a way that is the case. And they're really wonderful opportunities to build wealth generationally, where I've had people provide 529 plan distributions through an irrevocable life insurance trust for college and, provide for special needs trusts through irrevocable trusts. I mean, that's another scenario where you're like, I need to provide for my kid, but I'm not going to be able to provide for my own long-term care event if that should occur, and the state's going to come after all my assets before that's the case. If you own the life insurance yourself and there's cash value to that, they're going to have you remove that cash value, which is going to disintegrate that life insurance in a heartbeat. So by putting this stuff in a trust, an irrevocable trust, it actually creates the opportunity to shelter that asset. Super important, and it's used in so many ways.
There's a lot to this conversation, you guys. We've actually covered more in depth some of the things that I think we had planned on. As usual, we get in conversation, share the experience with you that we have, and some of the things that we probably could cover in another conversation are strategies for qualifying, trying to make sure that you qualify for the right kind of life insurance. What are some tips and tricks that we have for taking care of yourself and considerations around high risk hobbies or activities. Golfing can maybe get in the way in more ways than you realize.
Pickleball's out now. Pickleball's out.
Pickleball's out. But it would be really, really great to continue this conversation with you guys this next week, and I look forward to doing that. And you folks out there in the audience, we look forward to having the calls and the conversations with you to find out how you can really maximize the benefits of life insurance planning inside of your financial plan.
Oh, I was just going to say, Seth, you maximizing or even fixing. Like you might have a life insurance scenario and it just needs to be fixed. Like it's not the right thing and you know it. Like there's people that just know, like, I'm not sure that I have the right thing. Like give us a call. I'd be happy to walk you through any of those things because so many people sit down with, and unfortunately, an insurance agent who's just pushing one product, one thing, one solution, and that's what they do. And I don't blame them for that, but it may not solve your problem because it doesn't come from a planning perspective.
Well said. You're listening to Money on Tap. And you can reach us at 855-226-8551 or info@yourmoneyontap.com. Again, if you are subscribing to the podcast this week, send us a note. We'd love to send you a Money on Tap gift. We will see you next week. Be successful in your investing, folks.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.